So in this video, I'm going to be going over every single thing that I was looking for on today's short. I was able to call this out on my free Discord live. I secured 2400 on my personal live account. There was 7 people watching and it was a great day overall. I'm going to try and simplify everything the best way possible. And if you think everything is too complicated, like looking at right now on my chart, just wait until I actually explain it to you. Make sure you take notes and remember that this system it's meant to be implemented with whatever you are already using. Me personally, this is my way of simplification, and remember, you cannot simplify a process if you do not understand the complexity behind it, first of all. Okay, I'm going to explain to you the confluences that I had and the psychology behind smart money behavior that I was looking for. Okay, so let's get started right away. I'm going to take this out. Okay, so first things first, right? I'm on replay mode because I want to go over every single one of the things that I was looking for at the time and try to explain it to you as I was looking at the chart at the time that I was looking at, of course. So first things first, right? Normally I don't look any time frame higher than the 15-minute, but I like to see what's going on the higher time frames just to see where my potential draw on liquidity could be at. So I know when it comes to buy side liquidity, this pivot is far beyond where this pivots are at. So in other words, this is way too far. This is much more closer. Considering that today we have red folder news, we had FOMC at 12 p.m. You know, by now is around 6 a.m. right? Or well, 8:30. You understand what I'm trying to tell you. So you have to keep in mind that perhaps New York Open is not really going to move as much because the volatility really is going to come in during the red folder news. Now it's a lot of, let me see, that's around 3 hours until volatility comes in. So I'm not really expecting a major move when it comes to New York Open, considering the fact that we also traded from, we had these 2 major moves, right? So we had a bearish distribution, a small bullish retracement, what it seems like a consolidation, which in the 1 minute you can see that the move is much larger than it seems on the higher time frame. So a really large bullish distribution, or in other words, a retracement. Another major move from London high to the current low at 7 a.m. So because I had 2 major moves on the 1 minute, I'm not really expecting New York Open to have another major move. You know, it would take a lot of volume when it comes to smart money for them to actually push the market that much. So I was really, my interest level was at around a 6 out of 10 this morning. I pointed that out on my Discord as well. But let's get to the facts, okay? Because I like to get straight to the point. I like to explain the facts and simplify the facts for you. What you have to understand is that right now we are trading between 2 points of higher time frame liquidity. We have a 4-hour fair value gap right here, which is this major rectangle that you see. We have another 4-hour right here in the middle, or above, sorry, and multiple 15-minute bearish and bullish fair value gaps. So you can expect the market to do this right here, just bounce between these levels. Why? Because this is support and resistance. Everything is going to be support and resistance at the end of the day. Every single or every other term is just a different name for support and resistance, okay? So in order for me to determine whether or not this wave could keep extending, I'm going to draw my Fibonacci extensions from the major swing low, which then started a bullish distribution. If you don't know how to attach Fibonacci extensions, You can find the guides on my X. They are both for free. Go to my highlights and scroll through them and scroll through the posts. You'll find them there. Okay. Normally the Fibonacci extensions, I'll explain to you really quick. You attach it from the major swing low to the major swing high, which broke opposite structure. Okay. For the standard deviation, it's the same logic, just a little backwards. You don't use the candle wick, you use the candle bodies instead. So you use it from the wick to the candle body, which the opposite structure broke. Okay, so in this case, bullish candles broke this bearish candles right here, the first series. Okay, once I have that attached, the most important levels that I'm going to be looking for are the ones that are highlighted in red. These are quantitative levels, levels that smart money uses as support and resistance. Okay, the better the alignment between red levels, the better, the higher the probability. So right now that we know, look, this wave extended to 6.5 and to the 7.618. Normally when price extends to 6.854 and it keeps trading above them, it would normally extend to 7.618. Once it extends to 8.618, you can expect the market to trade even higher than that or lower than that, okay? Depending on where the extension is drawn to the upside or to the downside. But this is me personally, the patterns that I have been able to track so far for the past 7 months. So what else aligns with this area? The 4-hour bearish fair value gap and a perfect 15-minute fair value gap right here inside of that 4-hour. So I have 1, 2, 3, 4 bearish confluences aligning together and telling me, hey, perhaps this wave is in fact done. So now your job is to track this current wave, which is currently, is it done or is it still developing? Same logic we're going to play around in here, okay? So we draw our Fibonacci extension from this swing to that swing, the standard deviation, same logic that I told you before. Now, the first series got broken. You use the second series. What do I mean by broken? Level 6 was reached, and then the market kept trading below it. So now we reattach it to the next series of candles, which is going to be that. Now, what's going on here? Price reached 4.236, aligned with level 6 of the standard deviation, inside of what? A 4-hour bullish fair value gap and a 15-minute bullish fair value gap. What else aligns with this level? Ranges of equilibrium, right? We know that our major wave started here and ended right here at London high. So that is your range of equilibrium. What else is in here? Golden ratio of equilibrium 0.618. Look how perfect it aligns. So now what I was asking myself is, okay, is this really the major move? And normally, by the way, this is one of my setups. I have multiple setups on my X in which I explain to you that I am in fact taking a long, and here's why. And these confluences are put together. However, I was doing something else at this time. I missed the setup and I was completely fine with that. We also had an SMT, I believe it was a bit between these lows. I can't really recall. I'm not going to go over things that it shouldn't matter to you. Like I said, I like getting straight to the facts. Okay, so what does all of this tell you? This is a high probability that the algorithm is going to react at. What else happened at this area? Bearish fair value gap, it gets invalidated and a new one gets created. Change in state of delivery right here. Oops, sorry. So normally this would be my entry. I would take a long after the inversion. The stop loss goes at the protected low. I know that's a protected low because This sweep happened after what? Look at these right here. Market structure is what matters, okay? We know that this is the overall bearish distribution. Bearish distribution, accumulation, manipulation, distribution, accumulation again, manipulation. What comes after manipulation? Distribution. So now, normally, I would target high RR trades, such as London High. But in this case, I knew that, first of all, volatility is going to come in late. It's not going to come in at market open. Could it happen at market open? Yes. What is the probability of it happening at market open? Probably not that high, because FOMC is going to be at noon. So I'm not really interested in a high R trade. So let's say if I would have taken that trade, right? And by the way, I'll get to the trade that I took, but I'm explaining to you the multiple high probability setups that you could have taken today, okay? This is going to be your high probability trade. Opposite, liquidity, always. You always want to exit at liquidity. Don't ever get greedy with your RR, okay? Always exit at liquidity and trail your stops aggressively, okay? So now I missed this move, okay? I'm not interested in this anymore because I missed it. So what I was looking for on my trade was tracking this current developing wave. So same thing, I attach my my standard deviation here. Now for the Fib extension, the major swing high which broke opposite structure is going to be this one right here. So I attach it there. Now I see where the projections land. Golden ratios for the standard deviation align with London High. Golden ratios for the Fib extension also align with the area of London High. So could I potentially long and wait for instead a retracement in here? Wait for some form of SMT right here. For example, say ES sweeps this sell side, and then Nasdaq remains the stronger asset. Sure, I could do that. Am I going to take that trade based on just hypothesis? No, I'm not going to. I'm not interested in doing that. Price action determines what's actually happening, okay? So I got both projections of where the market could potentially extend to. Now I draw my equilibrium for the opposite side. Equilibrium for this side is going to be from the swing high, which started the bearish distribution, to the peak low, which is that 750, I believe. Yep, equilibrium. We are already trading above the 0.618. I could expect the market to potentially come to the 0.786. Okay, but once again, these are now just hypotheses. I am aware of the major move happening. I am aware of, okay, perhaps this is the major reversal. Now the market is going to keep distributing higher. But what you have to align it with is the market maker model at play. Your technical analysis does not mean anything if what the market makers want to do doesn't align with it. Okay? Pay attention to that. Your technical analysis does not matter if what the market makers want to do does not align with it. So that's why me personally, I like to track both sides of what's happening. Because if I track both the bearish sentiment and the bullish sentiment, I just let price action determine what's going to happen for me. Once I see what probability is actually playing out, then I take my trade. I'm never, oh, I'm bullish for the day or I'm bearish for the day. I never say that, and I never will. And I've been open-minded on my X and my Discord about it. I tell you guys all the time, do not be married to a bias, bro. Bias is just, it's for beginners, bro. Anyway, I'm pretty sure that most of you, even if you're not advanced in trading, that is basic understanding. And that's an easy way to put it, okay? Don't ever be bullish. Don't ever be bearish. Be open to both sides of the market. Why else am I open to both sides of the market? I know that on a higher time frame, we're bouncing between liquidity points. Look at these, okay? Now, something that I recently started using is going to be the market maker's favorite, or my favorite tool to track market makers, okay? So let me grab all of these, put it into a folder so that I can hide it. 06, 17, 26, back testing. So let me go to the 15-minute for that. On my indicator, I'm going to scroll down. If you want this indicator, by the way, go to my X, and then you'll be able to find what you need in order for you to get it. I'm interested in seeing the volume profile for the previous day, where smart money was positioned on the previous day, so that I can see where most of the volume was traded at. Okay, so I'm going to graph my fixed range volume profile. I'm going to draw it from where the day started to where the day finished previously. Okay, now I'm going to hide this. This separates the days, by the way. I don't think I told you that. Now, what does this tell me? The yellow lines on both of these, this is going to be my value area low, my value area high. The green line is going to be what is called a POC, point of control. Anywhere in this area, inside of this area, I am interested in trading. Look, on the 15-minute, even though this looks like a bullish wave, to me, it looks like a bullish sideways consolidation. I know that, so in other words, to me, this looks like the market makers are consolidating the market at this level. So now I want to see them either defend it or fake out a defensive price action, such as, let me show you what I mean by that. We had a 15-minute change in state right here. 15-minute change in state. It is currently 9:15. And we also invalidated a bearish fair value gap. So we had a change in state of delivery right here. We broke that structure. We had another change in state. And it looks like the market is potentially going to go for London highs, right? Something I always tell the people in my Discord is that you have to think what the market makers want most people to believe, and then you do the opposite of that. Because I promise you, the algorithm, it moves to trap people. It's triggering, it moves in the sense of, I'm going to trap longs, but I have to perform this kind of move on the market for people to go long. Same thing for shorts. So to simplify that for you, I think I overcomplicated it. The market likes to trap people. It likes to, oh yeah, look, we invalidated a bearish fair value gap. Now we're trading bullish. We are definitely going to go to London high, bro. Go ahead and take a long right here. Me, I'm going to do the opposite of that, because I know smart money likes to trap people. Smart money needs enough people positioned against them for them to move the market, because they are the ones that move the market, bro. me and you do not move the market, bro. So right now it's 9:15. I'm not really interested in taking any positions until 9:30, because once again, major move. You go to the 1 minute. Major move. There's no way 9:30 is going to perform another major move right away, unless the red folders came in at 8:30, or we have red folder news coming at 10 o'clock instead. So I'm not really interested in taking any trades right now. And just to show you another thing, I have ES pulled on my other chart. However, am I even on replay on this, bro? I thought I was. Let me go here and show you why I enter shorts. I don't have the premium subscription on TradingView. I refuse to pay for it. So that's why I got him pulled out on two different windows. But I'll get to that later, okay? I always have both charts pulled up so that I can look for SMTs, time divergences, okay, or smart money techniques in order. Because for stronger setups, you always want to take the stronger asset. For shorts, you always want to trade the weaker asset. And I'll show you what that means here in a little bit. So right now, I call this out on my Discord as well. Whenever I see a major move and then I see not really a strong continuation, such as this looks to me like a sideways consolidation. I'm not interested on that. I know that smart money is just trapping both sides, both shorts and longs, is accumulating positions for them to then perform the actual move. Okay. So let me bring my drawings back up. So now look at the areas that align with everything that we're looking at. Remember, this is our major tool to look for. If smart money does not defend this level, we are most likely bullish, or bearish. If smart money defends that level, then we are definitely bullish, because we know that this area is where most of them are positioned at, okay? Or they were positioned at on the previous day, you know. Okay, so now we have swept London. We are reclaiming above Asia high. We had a 15-minute change in state. Now I wait for 9:30. I'm not interested in anything after 9:30. 9:30 is right there. I thought it was after. Anyway. And I call this out on my Discord too. If we are bullish, I would like to see some form of sell side in here get swept, and then also cause some form of SMT with ES, either NASDAQ be in the lower low or NASDAQ be in the higher low. Either way, if that happens, I would go ahead and take a long position. I would, like I said, I'm open to both sides. And something that I forgot to mark, what else is on the 15-minute? We have an order block. 15-minute order block. There's different ways that people mark order blocks. Me personally, I use the simple smart money concepts order block logic. So the ones that happen at key levels, such as the London low sweep, a bullish candle, or the opposite candle color engulfs the previous one. So in this case, my order block would be this one right here. So I have a 15-minute order block right there. If bullish, this is an area in where I'll be interested in seeing a bullish confluence happen at. If bullish. Once again, I'm open to both sides of the market. So right now, I'll let it play out. And I was telling people around this area that any bullish confluence at these levels, I believe is going to be a trap. Why? Because that's what market open at 9:30 likes to do. It likes to trap people and be like, oh yeah, look at this bullish candle, engulf this massive bearish candle. We are bullish. That's a trap. And I'm really, I'll start recording my lives if it doesn't consume too much resources on my computer, because I do have a lot of tabs open whenever I'm working on it. But I want to start recording them as well, my lives, so that I can just directly upload that as well. But what I was telling them on the live is that, you know, like I mentioned, any bullish confluence that we see from here, bro, I believe is going to be a trap. And if we are bearish, I would like to see some form of something like this. If we are bearish, we come up here, we sweep this buy side, so take out late shorts, and then reverse bearish from here. That's what I would like to see if bearish. If bullish, I've already explained to you what I'm looking for. But because any bullish confluences right at market open are most likely traps, then perhaps I am now leaning towards the bearish side. All you have to understand is that I am mapping out probability plays to both sides. I am mapping out where the market could potentially move to if bearish, and what the market could potentially do if bullish. Okay? And this is how you should think, because you know the market is going to move one or another way. Now, if you are anticipating, never predicting, anticipating the move, you wait for price action to tell you, oh yeah, your idea number 1 is valid, or idea number 3, 4, whatever, whatever number it was, price action is going to validate your idea. Okay? Never prediction, always anticipation. So bullish confluences right here. I wasn't really interested in any of that. Now, I'm tracking this current wave. I was tracking the standard deviation from the wick to the same candle, because the previous one to that is the opposite. That's how you use the standard deviation. Price had reached golden ratio 2.5, aligned with half of an order block, so the middle point of the order block, the middle line right there. We bounced it from it. What else was in here? I added BWAP in here. I like to use BWAP because standard deviations and fib extensions normally align with BWAP. This is the lower band of BWAP. Anyway, what you have to understand to not, I had it right here already. What you have to understand to not overcomplicate it, so that you guys don't tell me, oh, you're looking at too many things. I'm looking at the same things, telling me the same narrative. I am now validating market maker psychology with my confluences. These two confluences align together with the 4-hour fair value gap, the 15-minute order block, and this golden ratio. That's not enough confirmation for me. Even if we invalidate this bearish fair value gap. A lot of you I know would have entered somewhere around here after this candle closes, and you would have targeted, say your stop loss normally goes right here. I see a lot of ICT traders do this, by the way, and you target London highs. I'm not open to that. And I told my Discord, I'm not really interested in days because it's not happening at a high probability area for me. So I'm not interested on it. And in me personally, I believe that any bullish setup presented at this time is a trap. Why? I feel like we're going to go bearish, bro. There's more bearish confluences aligning with my thought process than bullish confluences. Because, I mean, just look at this, okay? We reached this level, but we haven't really moved strong to the London high. And I know most people, what most people want, bro, is for us to trade to London high. That's what most people want. The market makers are going to do the opposite of that. Now, I'm leaning towards that probability more than the bullish one. What's going to validate that idea is whether or not we defend the point of control, or sorry, the value area low. If we don't defend this position, then we are perhaps, or this level, sorry, then perhaps we are bearish. And on top of that, a wave normally ends at this area. Bro, really? The wave normally ends at this area. Once level 6, 7, oof, have been hit, bro, a wave is most likely to end. Once the golden ratio 6.854, it's hit, aligned with a 6.5. Those are both the peak levels. But if we see price extending towards the 8 and it keeps trading above that, then I am interested in seeing it trade towards these levels even higher. But keep in mind what we said at the beginning of the video. To simplify it for you, the buy side liquidity that the market makers could potentially be seeking at the highs is way too far. It's way too far from where we are trading at. Unless there is some magical red folder news, bro, for the market to move that aggressively, I am leaning towards the market makers to hunt this liquidity right here, Asia low and PDL. What else aligns with those levels? My golden ratios currently drawn. But to simplify it for you, the market makers are trapping longs because that's what most people think is going to happen. I already know that perhaps this wave has ended because my golden ratios in here have been hit. This is the major wave which started this whole move right here. So if the major wave is telling me, hey, perhaps we did end this wave, bro. So what you should be focusing on is the reaction that we have at whatever other confluences tell you that yes, we are going to continue higher or we're going to continue going lower. Okay. So right now, I was waiting for a short setup. I was leaning towards that. So right now, I just wait. I was waiting, obviously, for a short setup to be valid. You want to wait for major buy side liquidity to get taken. You never want to just, oh yeah, this was a retrace, now I wait. I even marked this changing state as an area for revisiting because the market it likes to do this right here. It revisits a changing state of delivery area and then it continues going lower, right? So I marked this as a potential retracement, but I saw both assets trading equal at that time. So I wasn't really interested on that. What I was interested in was seeing some form of SMT. Which asset held an SMT? So I kept waiting. Right here, I saw an SMT. Why? Because we swept this buy side. But NASDAQ, this swing high on NASDAQ or on ES, on NASDAQ, yep, it had been swept. This is 170532. Let's go to 0532 in here. This had been swept on NASDAQ. You see that? Let me mark it out for you. What else is happening at this area? Value area low. The trap is forming at the value area low. We trapped longs. Now there's a bearish S&T happening. Now my rule of thumb, me personally, it's to trade the weaker asset. So if I'm taking short, I'm interested in the weaker asset. So the ones that has, in this case, a lower high. Even though I do prefer NASDAQ, and NASDAQ ended up delivering better on price action. They both ended up delivering better, but NASDAQ, it moved better. I'm not going to lie with you. And I was not anxious, but I was making jokes on the live. I'm like, dude, I prefer NASDAQ. Like, fuck the S&P 500 and all that, right? But anyway, what else is happening in this area? Equilibrium is revisited. 15-minute and 4-hour bearish fair value gap are revisited. Bearish SMT. Longs are trapped. I enter my short after ES invalidated this bullish fair value gap. Because if we are bullish, this is not going to happen. If we're bullish and we already had the first trap develop, so bullish confluences, then boom, got taken out. This early longs got taken out. They got fucked. Now, because that already happened, we should have enough momentum to just continue distributing towards London high, right? But instead, we start invalidating bullish fair value gaps. So that to me was the algorithm I played telling you, yes, we are in fact bearish. Once this candle closed, the third one, I told you guys, or I told the Discord, once the third candle closes after the one that invalidated the bullish fair value gap has closed, then I'll enter, because that candle will tell me everything. Now this candle, look, it tried to go up, and then the market makers push that shit down. I enter right there. This candle, my stop loss goes at the swing high or the wick in which the algorithm had a reaction. And then what was my target? My target was this right here. Opposite liquidity. I could have targeted Asia lows. So I could have targeted right here. And that was my initial target, actually. Now that I'm looking at it, that was my initial target. Because we were close to it. And even if we are bullish, it makes sense for us to actually come down here instead and then reverse bullish, because that would be more liquidity for smart money to then actually have the necessary fuel to then continue going higher. So I'm adapting to both sides of the market, bro. Like I told you, you have to be open to both sides. So I saw that open, and then I just waited. I waited. Right there, I was like, oh yeah, I was so happy, right? And then ES started consolidating sideways. I told you that if we had a changing state right here, let me show you actually two different windows. Where's the regular line right here? If any candle on ES closed above this, that would be an invalidation to my idea, but it didn't. The market kept respecting the bearish narrative, and the bearish candles started winning. I got trail stopped right here because I was securing profit as it went down. Dude, I'm not willing to just put it at break even and be like, oh, that's a risk-free trade, bro, and then wait for the market to reverse on me. I've seen 95% of the community, bro. This is what happens to them. And that's why it takes them a long time to become profitable, bro. And they're like, oh, that's just part of my system. And I'm like, well, your system is shit. I mentioned that on my previous video, bro. And, you know, I said it on the live. I'll say it again. Your job is to position yourself at high probability areas and secure profit as soon as possible. That's your job. Your job is not to be right about this entire move. Your job as a trader is to literally secure profit as fast as possible. I secured $2,400 right here. I could have secured, I believe, around 4,000 or wait, 3,500 if it went all the way down here. But I was okay with not securing that, bro. Because who else is going to give me $2,400 in 11 minutes? Who else is going to do that for me? Nobody. I know, ironic, right? I'm Mr. Nobody. I'm not gonna pay you that, by the way, in case you're taking it like that. Okay. So that's it, bro. That was why I took the trade today. We had a trap. Smart money wanted to trap longs. I saw the algorithm reacting to a bearish confluence at a value area low. Smart money was trapping longs at the value area low, and major liquidity such as the Asia low and PDL had not been taken. And price action, bro, is way too close to these levels for us to just be like, oh yeah, we're not gonna sweep that, fuck that, and then we're just going to keep distributing higher, bro. That does not make sense to me, bro. So like I said, even if we were bullish for the day, this move makes sense because it makes sense for smart money to take out major liquidity before it reverses to the upside. And I trail my stop against invalidation. That's why I trail stop, because even if I'm wrong, I'm already securing profit, bro. For example, right, this candle closes right here bearish, and then you see this candle pushing through. From this stop loss trail, I move my stops to here. And then I saw this candle pushing even lower. Then I trail my stops around here. And then I saw this candle pushing even lower. I trail my stops to the initial wick of that candle. And then it retraced again. And then I got stopped out. That's my job as a trader. To secure profit as soon as possible, bro. After this, bro, I walked away. I went ahead and enjoyed my day. I'm still not finished with my day. I'm about to go work out in the sun, bro. Like... Bro, I really hope that you found this video useful. Like I said, you know, please, if you are in my Discord community and this was perhaps too much for you to take at once, Every single one of these things, bro, is just backing the narrative behind the psychology of smart money. To simplify it for you, all I am doing is thinking like the market makers. What do the market makers want people to believe? I'm going to do the opposite of what they want people to believe, because I know the market makers trade against retail. They move the market, bro. You and me are not market makers, bro. Okay. Once again, the support on my X really helps me out. It shows me that you guys do appreciate the free knowledge. I don't really know anybody else taking their time to actually explain to you with this much depth everything that I do. I share my entries, bro. Recently, I started doing live streams, which I love it, by the way. The support of my X lately has been a lot higher than before. So, if you want to keep seeing my free guides, my free tutorials on anything, if you have any more questions, please join my community on Discord. Go to the Ask Me Questions section, or just the general chat, bro. It doesn't matter where you ask me questions, bro. I'll always answer if I got the time. So, if there's anything else that I could expand on, please let me know. Okay? And once again, I showed you that trade on my X earlier. If there's anything else, just let me know, okay? Start simplifying your trading with psychology. There's a reason I only charge everything that I do, bro. The only thing that I do charge for is my book, because my book is literally how I think in systems. It's how I simplify my trading with or to psychology alone. Nobody else in this space thinks like me, bro. Nobody else in this space simplifies their technical analysis into psychology. The charts, whether this is true, by the way, whether you believe it or not, the charts are a visual representation of psychology. And that is whether you accept it or not. There's a reason your A plus setup wasn't valid. The market makers made it so that, oh yeah, here you go, here's your A plus setup. And then boom, you got liquidated. By liquidation, I mean your stop loss was hit. Okay, that is called engineered liquidity. The algorithm engineered the setup that most people are looking for to then crush your dreams. Okay? Have a good rest of your day.